Thanks for sticking around, everyone. I'll try and make this entertaining for you. First things first, Lulu wants me to tell you that I do own this stock. She said that if I didn't tell you that, she'd drag me out of here feet first. So I'm just going to get that out of the way immediately. We've owned this stock for about 3 years. So I'm going to present Red Violet. 500 million market cap, 465 million enterprise value, so about 35 million in net cash on the balance sheet, and an average daily trading volume of about $3 to $4 million. I'm going to skip over this, just legal disclaimer, trying to present everything accurately, and please don't sue me. There's been a lot of talk about like how many microcaps are actually high quality businesses, and I thought it would be helpful to look at this specifically as it relates to the software and IT services space, between 50 million and 1 billion of market cap, positive GAAP net income with a 3-year revenue CAGR of 10% plus, and Red Violet falls under all of these metrics. So what do they actually do? Red Violet is in the business of identifying people and their assets, their location, and then selling that data to companies that need to verify identities and track down individuals, essentially. They take billions of individual inputs and they put it together in an engine that's called IDI Core. That is their main product. And then they sell that to companies in the fraud prevention space, identity prevention, debt asset recovery, skip tracing, basically any company that needs information on people. Ian, I think, I don't know where Ian is, but if Thomas Jefferson had that when he was trying to find the guy who built the tortoise, who changed his name, he would have found him in about 5 minutes. Some brief financial highlights of the company. This is a highly scalable business model. Effectively, all you are paying for is an office, people, and data after you build the engine. The engine's very expensive. I'll go over it in a second, but they effectively spent about 50 to $60 million over 5 years before getting to commercial scale. Just to hone in on a couple of these points, the incremental EBITDA margin's really high because when you buy data, that's just a fixed cost. And so each additional revenue flows through at a really high incremental rate. And for those of you who think that adjusted EBITDA is not real, which, you know, it isn't. I have provided you with free cash flow metrics and a reconciliation of their free cash conversion on EBITDA. You can take a picture of this too. Just a little bit of background on the industry. The Red Violet team was actually behind the creation of the 2 800-pound gorillas in the data fusion market, Accurant, which was formerly called Seisint, and TLO, which is now owned by TransUnion. These are businesses that cumulatively do about $2 to $3 billion a year in revenue, and the entire industry is growing very fast. Companies are very concerned with being able to identify individuals, doing it quickly and correctly, whether it's employment searches or skip tracing or bankruptcy proceedings. So every company in this space is growing quite rapidly. Even though they're already very large, they're growing by about double digits. So how can Red Violet compete effectively against a company like LexisNexis and TransUnion? Well, the technology team that built both of those platforms is the one that built IDI. It is the third iteration. They knew what worked well about those platforms and they know what didn't work well. And so they made this one their third, their last, and their best. The guy that built it, Ole Paulsen, he's now fully retired, out of the picture. So highly unlikely somebody poaches him and asks him to build a fourth one. The key differentiation of the product, I think, is the connections and the throughput over the quantity of data. You know, you might say to yourself, like, okay, well, Equifax has a lot of data, Experian has a lot of data. Why would anybody pay Red Violet for their information? I want to use a case study. So Appriss Insights is a workplace and public safety background check company. They were acquired by Equifax about, I want to say it was 1 to 2 years ago. They said to Red Violet, hey, we're going to phase you out. We want to extract some synergies. We want to use our internal data engine to provide background checks to save some money. They started to move workloads off of the IDI core API, and throughput and accuracy immediately dropped. And eventually they signed a long-term contract with Red Violet. They went from about a 6-figure customer to now they're doing over 7 figures a year with Red Violet. So if this is such a great company in the microcap space and they can compete with some of the largest businesses in the world, why is it a compelling opportunity? What makes it cheap? I don't think anybody in this room are going to have a problem with the last 3 points on here as it relates to analyst coverage and illiquidity. I think you'll have a lot more troubles with the top 3 there. Michael Browser, Phil Frost, and Hank Asher are no longer involved. Well, Hank Asher isn't because he died 15 years ago. But the other 2 are no longer involved in the business in an official capacity. I think a question on everybody's mind is how's any business going to perform in a volatile economic environment? A lot of Red Violet's business is counter-cyclical because they deal with law firms, private investigators that are doing work on debt collection and bankruptcy or tracking down people effectively. Prior to COVID, the collections business was about 40% of their revenue. Once COVID hit, that came to a stop and didn't start growing again until 2024. So that leap there from 12.1 million to 13.5 million, that basically all happened in 2024. So I know everybody thinks that they're a long-term investor, and I will show you our 5-year valuation and walkthrough, but what will get you over the hump, how will, why do I need to buy this thing today? We all want to know, how am I going to make money over the next 12 months? Whether you agree with that philosophy or not, it's fine. I'm just going to tell you how they're going to beat numbers. The sell side is way too low. They have 1 analyst, so you can really hardly call it the sell side, but it is there. They are publishing active reports. Their 2025 numbers imply an incremental EBITDA margin of 20%, which is the lowest in their history. And the only other time they got even close to that number was when they hired 46 net new people, which was about a 33% growth in headcount. So a significant growth in headcount was added to the G&A line, thus depressing the incremental margin profile of the business. I did some back of the envelope math just to figure out what the street is implying in terms of net hires. It's about 59. You definitely want to take a picture of this. But management has been vocal in saying that they're going to hire less than 30 or fewer people. And this is really simple math because I said at the beginning, the data costs are fixed, your overhead is fixed, you have slight annual price escalators, but you're not incurring significant additional cost for every dollar of new revenue that comes through the door. So the only way you can really drive a big, step change down in incremental EBITDA is to hire a significant amount of people that are not yet productive. But management said they're only going to hire 30, street implies 59. Even if Red Violet doesn't beat the street's revenue number this year, I think they can beat their EBITDA number by at least 15%. These are our numbers. We're a little bit higher on revenue just because we think that their number implies a significant deceleration outside of the collections vertical, and one that we've really never seen in the business before and is not consistent with recent trends. So this is what it will be worth in 5 years, I hope, I should say. I don't actually know what's going to happen. But effectively, we have a 3-year, however you want to frame it, 3-year double, 20 to 30% CAGR. The vast majority of this we have coming from EBITDA and revenue growth and not necessarily multiple expansion. So that's pretty much it. Thank you.
We can take one question if there is one. One question. Raise your hand if you have one. Okay.
Hey, sorry, I didn't know it was being handed down. I just wanted to understand, thank you for doing the presentation. How tied to real estate activity are they? Given that I think that they sell into their forewarned product, maybe you can elaborate a little bit.
Yeah, I would have covered that if I had more time. So IDI is the main engine that runs the entire business. What you're referring to, the forewarned product, is basically it's basically IDI with a skin on it that is then marketed to realtors. So what they do is they go to real estate associations and they say, hey, you know, when you go to a house and you meet someone, you don't really know who that person is. So if you sign up for this product, you can enter their phone number and get information on them, potentially criminal information. That business, particularly forewarned, is 15% of revenue, growing slightly faster than the core IDI product right now. So it's, I would say, between forewarned and real estate business that is within IDI, because there are people that use it to find like real estate records, or to say, like for skip tracing, to say, okay, well, who owns this plot of land? I think would probably be about 20-ish%, but I'm really guessing on that one, because they don't disclose the breakdown within IDI. I only have the breakdown between forewarned, the app, and then IDI. I hope that answers your question.
Thank you, David.